I wanted to ask the panel about one of the, I guess, big shifts, as I think it's almost tectonic in the startup field, is the fact that there is now every single one of you in the audience today could be funding a startup through crowdfunding portal. Do you guys actually look for people that may have gone out and crowdfunded?
What used to be really important, you used to raise money for cash flow. You used to raise money for stock for your first production run. Now you use Kickstarter to pre-sell.
They're really beautiful stories, and and it's something we all want to believe in, right? The crowd is stronger than an individual. But there's also, what is it? It's like 70% of ideas that go to crowdfunding fail to meet 20% of their funding requirements. Sure. And it's also hugely intensive. So you essentially have to run your own campaign. So you have to do the marketing for it, you have to get the word out, you have to ask all of your friends and family to get the word out. And at the end of the day, that takes up a lot of your time. So unless you know and you've seen success for things like, for instance, you can drop it on your foot, it has been successful in the past, therefore doing rewards-based, you can raise those monies. But then, with Crowdcube and others, because of the SEIS and EIS benefits, there is more money going into equity-based platforms like Crowdcube and others.
So as an angel, are you looking at these platforms actively?
So we had, interestingly, we had an educational technologies edtech startup pitch to us. And they had their product ready, they had partnerships with content producers, so they looked really ready for investment. And one guy in the room said, look, it all sounds really good, but why are you talking to me now? And why haven't you gone and done a crowdfunding campaign? Because you're a consumer-facing business. This will really reduce the risk for me, so go away, do your crowdfunding, and then come to me. So it's interesting how the existence of these other financing sources and what they can signal to other investors.
Who would be a perfect partner? And for us, as people who are co-founders, who would be our perfect investor?
So for instance, Zomato, we have three main investors. So we have InfoEdge, Sequoia, and VY Capital. InfoEdge was one of our first VC investors for a very big reason, because they actually got our business models. VCs generally, they're in the business of making money, right? And most of them are actually fairly hands-off. So you've got to be very careful about when you bring VCs in and what you're looking for. But you can also bring in people who believe in your business and can help you build your business. So I think that's the most fundamental thing to look for in that perfect partnership.